Thanks for tuning in to today's podcast. Please remember that all of the information in this podcast episode is limited to general information only. That means the information is not specific to you, your needs, goals, or objectives, so you should seek the advice of a licensed and trusted financial professional before acting on the information. And before you acquire or apply for a financial product, please read the PDS or product disclosure statement, which should be available on the issuer's website. Lastly, please keep in mind that past performance is not indicative of future performance. Kate, welcome to this episode of the Australian Finance Podcast.
It's good to be back, Owen.
Yeah, it seems like we always have special guests, and it's so cool that as our podcast grows, we get to chat to more and more interesting people. And one of those very interesting people today is going to talk to us about, I guess, the banking system now and the future of banking. He's one of the faces behind a product that I know you know and use quite frequently. So maybe I'll hand it over to you to introduce our special guest for today's episode.
Yeah, absolutely. So listeners may or may not know that I have mentioned a company called Up Money a few times in previous episodes. And it's actually an Australian neobank. It started a few years ago, but I'm sure Anson can tell us a little bit more about the backstory. But I have personally used it for a few years and have really been enjoying it. And so it was fantastic to actually get one of the creators of the product onto the podcast today. And I'll hand over to Anson to introduce himself and a little bit more about Up and his role and sort of his journey so far.
Yeah, thank you. So my name's Anson Parker, and I'm the head of product at Up. As the intro said, we're a neobank. We actually launched about 2 years ago, sort of officially launched. And before that, we spent about a year just kind of building our MVP, our first version. And so we've been in the market for 2 years, and we have, I think, just under 300,000 customers, which is pretty good. I think we'd probably be the leading neobank in terms of scale. And I guess what a neobank is essentially, a modern reimagined bank that really puts technology at the center of what they do. In our case, it's meant really trying to reimagine, I guess, banking from that modern viewpoint, knowing that all of our customers have, really high-powered smartphones that can do great communication and security and have all these amazing capabilities that can really open up, the potential both to keep people sort of on top of their money, but also give them great tools to, achieve goals and pay their friends and things like that. So, our model is probably different to some of the other neos in that we actually partnered with an existing bank. In our case, it was Bendigo and Adelaide Bank. So we're able to sort of leverage the banky stuff they do because none of us at Up are really bankers. We're from the sort of online technology software world, and we didn't really know the first thing about, ledgers and regulatory compliance and that kind of stuff, the financial stuff that you kind of need to know to be a bank and take care of people's money. So we're able to find people that were really good at that and that trusted us to then look after everything else. And so we can just focus on kind of the software and the customer experience and make that as awesome as possible.
So you were involved with Up from quite early on, from the early days, weren't you?
Yeah, from the very beginning. So actually the sort of company behind Up is a company called Ferocia, and we started out probably 8 years ago really as a services company building apps and websites for companies, and that's how we found our way into the financial and banking space. And we continue to build actually Bendigo's own customer banking experience. And I guess through the process of doing that, we realized kind of the untapped potential to build awesome experiences. So we learn a lot doing that about how payments work and everything you need to know, I guess, to kind of build a bank. We sort of learned on the job, and then we're able to kind of pivot into that more product space and actually launch our own product.
And I think listeners will be familiar with me mentioning the term ADI on the podcast, Authorised Deposit Taking Institution. So what does it take to build a bank, and is it easier now than in the past?
Well, it's kind of a little bit easier to get started now. There were some changes that came in, it must be a couple of years ago now, that introduced this concept called a restricted ADI or RADI. And that sort of lowered the barrier for entry so that you could without needing to first go and find tens or even hundreds of millions of dollars, you could actually make a start with sort of some constraints on your business. But having said that, to really get live, you still need to become an ADI, and that's a really tough thing to do. It takes a lot of money and requires a huge staff to really cover all your bases and build the sort of organization with the controls and protections that the regulators want to see when you are the custodian of hundreds and millions and billions of people's dollars. So it's a really tough industry to crack into. It's kind of like if you wanted to start a car company, you might have a really great design for a car, but to actually bring that to market is incredibly tough. And so that's probably one of the things that has helped Up get to market so quickly, is that we actually saw a slightly different path to becoming, getting our own ADI, if you like. And so we didn't need to have 80 bankers on staff and $120 million kind of stuff to get going. We were just able to really partner with an existing ADI to focus on the technology.
It's a testament to you guys and what you've built. Having almost around about 300,000 customers already is humongous, I think. How did you go? Because I know you've done like a lot of product design and that type of thing, Anson. How did you go about, I guess, conceptualizing what the banking experience should be and what you wanted your customers to feel from a user experience perspective?
I think that our starting point was, I guess, just that software mindset, not probably having much sympathy for, the legacy problems of banking and all of the good reasons why things move slowly in some ways. We just came in with a totally kind of naive software mindset. And so our first order of business was really like, why does this work this way? This really sucks. Like, why when I tap my card at a coffee shop, does it take 2 days for that to show up in my banking, and why is it so hard to recognize what it is and what I even spent my money on? So we really just were like, if we can fix all of those kind of obvious, to us at least, errors in banking, like that's probably a pretty good starting point. But of course, it's in software and startups, it's not just about like having a great product or building great technology. It's much more than that. To actually get to people and reach customers and get them to give you the time of day and come on board, you have to kind of win them over with, I think, more than just a great solution. And that's kind of, I guess, the importance of the brand. And for the team that's kind of worked on Up, or a lot of us, that's been one of the things we've learned over the last couple of years, is just the importance of the brand. And the Up brand is in some ways just a reflection of who we are. It's not necessarily been a constructed thing to say we should have this brand and we've created that brand. I think there's just a lot of us probably having the confidence to say, we don't have to pretend to be bankers to be credible in this space. Let's just talk the way we like to talk and engage with people the way that we would naturally do so. And I think looking back on the last couple of years, and maybe where we see perhaps others not quite being able to replicate that, I think it is as much a kind of success of brand and creating something relatable and compelling as it is the actual technology itself.
Yeah, and it definitely helps when people you talk to start to know about that company as well, because then you can say, I bank with Up or I bank with XYZ, and other people actually know what you're talking about, instead of saying, it's this weird unknown company that no one's heard of before.
Yeah, and like particularly in finance, that's huge, right? I mean, the early days, there were always big discussions and questions around, like how are we going to get people to trust us? Like, or should we even call ourselves a bank? Like, what's the right name for what we want to be? And those are tough things to just kind of, you can't just build the perfect web page or perfect marketing site and solve those problems. I think it is really about building those relationships and having that social proof out there. Like you're saying, if you've got someone vouching for you, that's way better than a really snazzy billboard.
Absolutely. So one thing I really wanted to know was, from what most of the traditional financial institutions, we know that they make a lot of their money from home loans and other credit products. So as Up doesn't currently offer those sort of things, how does it currently make money, and will this change in the future as well?
Yeah, absolutely. I mean, so one of our founders, Dom, he loves to say that banks have make money in two ways, right? Margin or fees. So a lot of banks charge like a monthly account fee, for example, which we don't charge. Um, or you make margin from deposits, and usually that's through lending out money, right? And then it's kind of the difference between, say, the interest you pay on a deposit and the interest you charge on a loan. That's essentially your margin. So Up can make some money today by essentially earning interest off customers' deposits, but of course we pay out a pretty solid interest rate on that too. So really, I think we're at the stage we're at today. Our focus hasn't been on generating a profit. That will become, more of a focus in the future. It's just been on really nailing the experience and kind of getting that core compelling offering. And over time, we will look to lending and credit potentially, and other products might be something in the investment space, or there's sort of other ways we can do that too. And maybe we would even have a paid version of Up that customers will want to pay for. So I don't think Up today is necessarily going to be what Up looks like in a couple of years. We'll probably have some more revenue generating offerings out there as part of Up, but today that hasn't been the top focus for us.
One of the things, Anson, is when you guys talked about it just then, is when you think about changing banks, you think, it's pretty hard to move banks. It's, there's this new thing on the block and I'm not really sure because it's money. Banking's meant to be this thing that's secure. Probably our parents tell us that, go with one of the big banks because X, Y, and Z reason.
Yep.
What are some of what are some of the key risks that, if there are any, that a customer would face with a neobank versus a traditional bank? But then again, I guess on the other side, what are some of the upshots of using a neobank versus a traditional bank? I think we've talked about customer experience, but I'm trying to get at what's the pros and cons of using a neobank over a traditional bank?
Yeah, I mean, I think sort of on that first part about sort of the switching and the the I guess the friction, if you like, or the difficulty in doing that, I think that is a good observation. Like Australians generally don't switch banks very often. I think there's something like 5% of people might switch banks in a year, which if you kind of average that out, that would mean someone might switch banks every 20 years, right? So it's not something that people do very often, and people really see kind of a lot of life admin around switching a bank. And traditionally, when people have switched banks, they've kind of made up their mind, and it might have been because they bought a house and needed a mortgage, or they moved into the city from the country, or whatever, some big event that sort of drove that. But they sort of pack their bags and turn up to their new bank saying, "Oh, I'm ready to switch here. Like, let's sit down and get everything set up." So I think that the one thing we were determined, I guess, early on, is that we didn't want people to have to make that really big decision to give Up a try. We wanted to just kind of be something that people could get a taste of, and then defer that decision for later on. And so I think that's a fairly common pattern in the app world. Like most people don't say, like, I've got 20 apps on my phone, I'm going to stop at 20. I want to go to 21. People are generally willing to try stuff in the app world. So if we could play more in that space and just have an offering that maybe just does a couple of things for certain people really well, like it's a great way to, it's a great travel product to go on that, trip overseas and not have to pay fees on purchases, or it's a great way just to have some discretionary spend, like maybe you've got a side project and you want to put that on it, or just use it for sort of your entertainment money. So we kind of wanted to make sure that it was just super easy and fast for people to jump on and try it out, and then we sort of felt confident we could sort of win people over with the experience. But I think in terms of the overall risks, I mean, the way that the Australian market is sort of regulated, there aren't really monetary risks. You're not going to lose your savings trying out a neobank. Providing you sort of don't have more than say $250,000, which the government will guarantee, through the ADI mechanism. So it's probably going to be more a question of, do the neos have all of the things you want yet? Most neos don't have some of the lending stuff, or some other things you might expect from a bank. It could be joint accounts, or just some of those more involved financial products that neo's just still building out, because most of them have only been in the market for 1 or 2 years. So I think it's going to be more around, is it the right time for you to move to a neo. I mean, I think from Up's point of view, we've really focused on spending and saving as kind of the two things we wanted to nail first. And if you're in that phase of life where that's most of your banking, then Up's kind of perfect for that group. And that does tend to be sort of the 18 to 35 kind of demographic. It's not that we didn't want 40 or 50-year-olds using Up. We just focused on those problems, and they tend to kind of skew younger, at least in terms of taking care of the requirements that people would have from a bank at that age.
And I think often traditionally in the industry, the large banks have tried to offer every service under the sun, from financial advice to lending to travel cards. And it's interesting watching it now. The big banks actually slowly starting to separate a lot of their services or condense their offerings and offer less. And I think as a young person, I don't mind going to different companies for different services. I don't feel like I have to have a bank that does everything. So do you see this with your customer base as well, that sort of changing perspective where I'll use Up for one thing, I'll use this bank for something else, I'll use this company for my travel card?
Yeah, for sure. And I think it's probably a question for the various neos, like which part of the people talk about that sort of being the wallet, right? Like they talk about the federated wallet, which is this idea that your credit card might be with some provider over there, and your transactional banking is with someone else. From our point of view, we really wanted to focus on the transactional piece. For us, that's kind of the heart of people's money, and the best place to be if you really want to make a difference. We could have probably done an awesomely executed premium credit card, for example, but it just wasn't what we wanted to focus on. And so for us, we are definitely looking at ways, over the next year or two, that we can sort of integrate even better with, say, a mortgage you have elsewhere or a credit card you have somewhere else to help you manage the repayments or save or whatever it is. So I think that's definitely that acknowledgement that we're not just the be all and end all for everyone is important, and probably does differentiate us maybe from where the traditionals started out. And it sort of frees us too, right? Because we don't have to build all of that breadth of product and service. We can just focus on less and do them better.
Absolutely. And something else I've seen is there's, in the last year or two, a lot of different neobanks or banks offering sort of not even a bank, I guess. There's a lot of these prepaid card startups popping up, doing all sorts of things. And I think it's kind of overwhelming because I like to test them, but a lot of them just seem quite similar. And I know you're going to be biased when you answer this, but how long do you think it'll take for this neobank industry to start consolidating? Because I really don't think there's room maybe for all these companies I see in the market.
Yeah, I mean, I think one of the reasons you see all of the prepaid offerings, I guess, is that sort of is a fast way to get to market. And some of the really big neos overseas started that way. Monzo in the UK, which I now think they have millions of customers, and they're a real bank, and they do kind of most of the things you'd expect a bank to do. I mean, they started out as a prepaid sort of debit card just to get in the market and sort of show prove the value that they could provide. But I think, as you say, as more and more neos sort of, they were probably one of the first ever neos in the UK, but Australia now has a fair few, actual neos and sort of prepaid type plays. So I think it's becoming harder and harder to stand out if that's all you have. And I think, from our point of view, being able to actually be the place where your salary comes in and help you manage that then provides quite a big point of difference over those kind of offerings. But I think in terms of consolidation, I mean, it's really early days, and there are, like we were sort of talking before the podcast, and there are sort of hundreds of building societies and credit unions around Australia, often providing banking for a small segment of the community. It could be sort of geographic or industry-based thing, and they might only have thousands or tens of thousands of customers, and they can run a good business at that scale. So, you can have sort of neos that could be quite niche players. They don't have to be all trying to be the next big four bank. But in terms of the ones that really want to get that scale, I think it's sort of a question of, is it going to make sense for a big bank to try and sort of swallow those up? Will the customers of those neos stick with them if they're owned by a big bank? If the plan was to to sort of bring all of those customers, if they're sort of buying that Neo for the customers, maybe for the young customers, I think you probably end up seeing something more like maybe a Facebook type of model in the US, where they will, they've bought their Instagrams and WhatsApp, and at least for a few years they just left them on their own to kind of run as separate businesses. Because I think in banking there, you can get sort of these economies of scale with sort of the core financial stuff you're doing. But from a brand point of view, to me, that will kind of end up being a lot of the big difference. I think, the big banks could potentially build a lot of the technology that Up has given enough time, right? Because they have lots of money and they can hire lots of people to do that. But I'm not sure they could ever necessarily build something like the Up brand themselves.
So you're not worried in any way, I guess not in any way, but you're not overly concerned about the big banks trying to copy you or anything like that?
I think it definitely is happening. I think we see just small things, whether it's the tone of voice suddenly changing on, say, App Store updates, or the vertical debit card's always a sure sign that they've been keeping an eye on what the newer players are doing. Small things like that. I think they are. I think that, I guess that my observation, and over the years and sort of talking to people that work in big banks, is that there are a lot of amazing people that work for these big banks that have kind of great ideas, right? Like they're watching what Neo's like Up are building and saying like, I've been trying to get this thing happening for 10 years inside my bank, like, and I was never able to do it. It's not that necessarily we've thought of the stuff that the big banks couldn't think of. It's more that we've been able to execute on those ideas and actually get them out there, and maybe had sort of the conviction to believe in them without having to stand up a business case and convince a bunch of execs to back an idea. And so I think that Up will probably give permission to some of those groups and those big banks to actually put the customer more central to what they're doing, to kind of push back against some of the business units that are pushing for product and things that maybe aren't as important. And so I do think it's the competition will heat up, and we definitely can't be sort of arrogant about that. We do have to make sure we are, executing and sort of and continuing to innovate, because I think ultimately that'll be sort of our real defense, is that ideas can sort of be copied, but if we can continue to innovate and keep up the pace, that's going to be a harder thing for people to close.
And I think one of the things about being a smaller company and being more nimble is that you don't have to go through those layers of bureaucratic process to actually roll out a tech thing. One of the things I was chatting about before was that you ran this perk up with the coffees, and I thought that was a really interesting thing. How long did that take to roll out?
It took so I guess from the original idea to actually getting it live, it probably ended up being a year, but it was not all of that was spent building it. But I think we're always looking for ways to explain what Up is and to demonstrate, I guess, our capability and why you should maybe consider Up over a traditional bank. And if you really get into sort of the technical reasons, I think people can kind of their eyes can glaze over. We like, I'm happy to nerd out to talk about sort of event-based architectures and real time and all these things, but finding a way to actually show people what that means, I think is far more effective. And for us, we just had this idea that, well, Up does this. There's a lot of tech we've built to instantly identify purchases, the category and the merchant, to be able to send people instantly a notification of a purchase. And the case of PerkUp, to even pay for that purchase before the customer gets the notification. So other than sort of a great promotion, it just felt like an excellent way to kind of show how Up is different to a traditional bank that typically is like, we've got this competition, you can win $1,000, and you go into the draw, and 30 business days later we'll draw the names and like send you a letter in the mail if you've won. The ability just to instantly give people that money just seemed like a great way to make that point.
Hey, Anson, we obviously, and particularly Kate, is a big fan of Up and what you've created. We're going to have links in the show notes to all of the resources that we talk about, including Up. But one of the things that we want to do is kind of just give you a bit of a quick pop quiz here at the end and talk more about you. Like, it sounds like even though your career, like, people can hear your voice, you're not that old, but you've had quite an impressive career so far, and responsible or being behind some really impressive businesses. So we kind of want to just ask kind of two questions. We've got one each, just a bit of a quick fire pop quiz if you like. So I'll hand the first one over to Kate.
Awesome. So what was the worst mistake you've made so far in your career?
Yeah, that's probably could be quite a serious question, but I was thinking a bit about it. I think there's sort of mistakes where it's just like I just effed up, like I just did something stupid, or it was legitimately something dumb I did. And then there's kind of like the bets you make that don't work out, which I guess you could call those mistakes. But I really think those you got to kind of. I'm a big believer that everything isn't just science. You do kind of have to take a bet and follow your intuition sometimes. So I think something we did at Up early days that was kind of ill-advised or just never really worked for us was going out with the first version of Up that was like a wait list. Like we'd seen other brands launch that way, where you kind of build this excitement, and it's kind of like the nightclub that builds a line at the door even though no one's like in the club yet. To kind of and it's kind of like we did that, and it was just we never quite executed it the right way. We were sort of our plan was to give people ways to get like further up the queue, to jump further up. And so we gave certain codes that would put you at the front of the line. And then what that meant was a whole bunch of other people who could see their exact number in line was getting bigger. And they're like, what's going on? So I think we pretty badly stuffed that up in some ways. I think just by, not really, maybe just not quite having empathy for our customers yet, and just looking at, well, what are other people doing, and we should do that too. So I think we learn a lot from that.
Okay, second question, which is kind of leading on from that, is what, as in like what organization or I guess product or which person do you draw the most inspiration from?
Yeah, that's a great question. I mean, for me personally, I love to look outside of my own sort of bubble, which means definitely outside of banking, but also really outside of software, at brands that I think are like doing amazing stuff. And I think they tend to have a similar theme, which is they just kind of challenge the norms, and they challenge complacency, and they kind of ask, why does it have to be that way? So I think there's like Oatly is like an oat milk brand, that started off I think in the 80s as a health food, right? And now is kind of this cool hip lifestyle brand. And a lot of that transformation happened over the last sort of 10 years. And so there's some great talks from the sort of the creative director around how they made that transition, which was, just having this completely different tone of voice, really just challenging everything and sort of becoming unique. But, like even like getting it, like ordering a pizza through Uber Eats and seeing like a really nice handwritten message on the pizza box. I'm like, oh, that's so amazing. Like, how can we do what this pizza shop is doing on Up, or even like what are video games doing? Like basically a video game is just kind of a user interface that's fun, like when you boil it down. And so I think there's a lot we can learn in banking, for example, from video games, like, and not in the kind of sleazy gamification stuff, right? It's just more like, what are these really compelling feedback loops that people love, and is there a place for that in banking? So yeah.
And I think it's quite interesting, and more financial companies are trying to gamify it or improve their user experience. So I'm very interested to see where it sort of goes over the next few years.
Yeah, I mean,
sorry, go on, Anson.
I was going to say on that point, I mean, I think in defense of sort of the game mechanics, and Up sort of has a few of those things going, it's ultimately we're looking to game mechanics to help customers at the end of the day, right? It's to help them build savings, or maybe it's to help them reduce spending. So I think some of those mechanisms can be kind of used for evil's probably too strong a word, but if you're just using it to sell more in-app purchases, or or just sort of build engagement on a social network by how many likes can I get, maybe there can be negative side effects to that. But perhaps if the outcome is, well, we're using this game mechanic that we know works, and the result is a customer gets like 10 grand after a year, then maybe that's more defensible.
Yeah, I was going to say, Anson, one of the things that I look for in, I guess, visionaries, creators, business people, etc., is the ability to think outside their own, I guess, toolkit and look to other industries or sectors where they find inspiration. So I'm glad you did bring up some names like Oatly in the milk. It's outside of banking and software. Kate and I will include a lot of show notes for this episode, mate. So I guess it just goes without saying, thanks for taking the time out. I know you're working remotely. It's busy. So yeah, just thanks for taking the time to appear on the Australian Finance Podcast.
Yeah, no worries at all. Thanks a lot for having me.
Thanks for joining us.